Hey, what's up, stock compounders? Brad here. So today we're going to look at a clip from Charlie Munger at the Daily Journal annual meeting. This meeting took place on February 24th, so almost a month ago. I'm a little late to the game here, but there's two questions in a row that I think are particularly instructive to kind of dive into a little bit. So the first one Charlie Munger was asked was about SPACs, right? And the second one was where he thinks the wretched excess is most egregious. So we're going to jump into the clip here and then we're going to kind of break it down afterwards. But before that, I just want to share, the reason I have so much respect for Charlie Munger. The guy I've learned the most from in investing is Monish Pabrai. Now, Monish Pabrai, if you look whenever he's done a lecture or anything like that, you can see right behind him in his office, he has a bust of Charlie Munger, okay? It's like a statue with the head and the kind of neck and shoulders of this guy right here, Charlie Munger. And if you guys have ever read Poor Charlie's Almanac, it's one of the best investment books to read in terms of just the breadth and depth of wisdom that's contained in those pages. So, legend here, Charlie Munger, legendary investor. Let's jump into that clip and then we'll break it down afterwards.
Bill Roberts asked about SPACs, and he points out it seems like everyone, including actors, athletes, singers, and politicians, are getting into the business of promoting their own SPAC. Why do you think all these SPACs and the promoter, what do you think of all of the SPACs and the promoters pushing them?
Well, I don't participate at all, and I think the world would be better off without them. I think this kind of crazy speculation in enterprises not even found or picked out yet is a sign of an irritating bubble. It's just that the investment banking profession will sell shit as long as shit can be sold.
Richard Lewis from Culver City, California, he asks, Charlie, last February, you spoke about the wretched excess in the financial system. Given the developments over the past year, could you give us an update on your assessment of wretched excess in the system? Where does it appear most egregious?
Well, it's most egregious in the momentum trading by novice investors lured in by new types of brokerage operation like Robinhood. And I think all of this activity is regrettable. I think civilization would do better without it. You'll remember that when the first big bubble came, which was the South Sea bubble in England back in the 1700s, it created such havoc eventually when it blew up that England didn't allow hardly any public trading in securities of any companies for decades thereafter. It just created the most unholy mess. So human greed and the aggression of the brokerage community creates these bubbles from time to time. And I think wise people just stay out of them.
Okay, guys, so that was the kind of two questions in a row there. The first one was about SPACs. Okay, Charlie Munger was asked, what do you think about all of these different people, celebrities, actors, athletes promoting their own SPACs? And Charlie said, well, I don't participate in it. And I think the world would be better off without them. Okay, strong words there. I think this kind of crazy speculation is in enterprises not even found or picked out yet, right? A SPAC, special purpose acquisitions company. It's just a blank check company, right? They're looking for a target. So they haven't, nobody has any idea if they're even going to find a target. But if they do, what that business is going to be. And this was an interesting piece here. He thinks it's a sign of an irritating bubble. Now that kind of piqued my curiosity. Why would Charlie see a bubble as irritating? As value investors, when I'll speak for myself, when I see a bubble, when it feels like we're in a bubble, I don't know, I get a little excited because what tends to come right after a bubble are fire sale prices. Okay, everything goes on sale in the stock market. So that's, I get a little bit excited when it feels like we're in a bubble, and it does feel a little bit like we're in a bubble now. I did a kind of a breakdown of Howard Marks' latest memo. He isn't quite sure that we're in a bubble. There's arguments on both sides. The market could keep going up. The market could pull back. He doesn't really have a clear sense of where we're going. But it was curious that Charlie Munger would say it's irritating, right? The bubble. But we're going to get more into that as everyone saw. It's just that the investment banking profession will sell shit as long as shit can be sold. One of Charlie Munger's zingers. That was beautiful, a beautiful thing. So the second question, where is the wretched excess most egregious? Well, it's most egregious in the momentum trading by novice investors, lured in by new types of brokerage operations like Robinhood. Okay, so why do new investors get lured in by Robinhood? Well, it's very user-friendly, the interface, Robinhood. For anybody who's used it, it's so easy to buy and sell stocks or options on Robinhood. And it's in our phone, it's in our pockets all the time, right? Our phones. We don't have to sit down at a computer, kind of dedicate a chunk of time to doing this. At any point in the day, we can pull out this phone and buy or sell stocks. Okay, so it's instant access to the market. And it's also free, right? Free. Charlie Munger points out it's not free because, they're really just selling data, right? Robinhood is selling data about what users on its platform are doing, sometimes before the trade even goes through, right? So these firms can front run customers on Robinhood. So it's not free, but it looks free. It feels free. There's no explicit trading commissions. And one of the side effects of there not being any trading commissions is that there's no friction, right? Before, when it was, $10 per transaction to buy or sell a stock, you'd think about it. You'd think, well, is this really a smart move? Do I want to buy and sell? And I think that was actually beneficial for investors as a whole, that there was that friction. As I think about it, the platforms themselves, TD Ameritrade, Interactive Brokers, they're a little clunky, right? The platforms are a little clunky. If you want to add funds, often it takes, multiple days for those funds to clear before you can actually buy securities. And the more I sit with that, the more I think, well, maybe that's actually an advantage to not be able to do something the instant that you want to do it. So that's kind of an interesting insight that I've had. And then he says, after lured in by new types of brokerage operations, and I think all of this activity is regrettable. I think civilization would do better without it. And I really liked what he said here. Now, this next part is really Charlie Munger, a lifetime of accumulating, history of the markets. Okay, it's great. So he says, you'll remember, which I don't know how many people are remembering this, but he says, you'll remember that when the first bubble came, which was the South Sea bubble in England back in the 1700s, it created such havoc eventually when it blew up that England didn't allow hardly any public trading in securities of any companies for decades thereafter. It just created the most unholy mess. So you have human greed, and the aggression of the brokerage community creates these bubbles from time to time. And I think wise people just stay out of them. Okay? So here I am. I've been trying to make money on SPACs. And, I've talked about it in other videos. But it's basically, buy if you can buy close to net asset value, which tends to be before a deal is announced. And then when you get that pop of a deal announcement, you get out. It's kind of a, cash alternative play where you're likely to do much better than you would sitting in, short-term treasuries or whatever other cash alternative options you have, maybe, in a savings account, what kind of interest you would earn on that. But it's interesting here, Charlie Munger says, I think wise people just stay out of them rather than what I'm doing, which is trying to, catch the upside and shelter myself from the downside, upside without downside opportunities. So it's getting me thinking. There was a concern I had about getting into playing SPACs in that particular way, which I encountered that strategy through Corner of Berkshire and Fairfax. The challenge, the potential challenge there is that playing these games, playing these short-term games in a bubble-like environment, it can really kind of rewire the psychology of an investor. If you're making money very quickly, on the SPACs, you make 50% or so whenever there's a deal announcement. It pops, you get out, you move it to something else. Once it starts to feel easy to make money, that can be a dangerous thing for investor psychology. So, it's something I'm sitting with a little bit more. I want to respect, kind of the long-term impacts that can have on me. So I'm just trying to read into a little bit what Charlie Munger is saying here about, that it's regrettable. I think the big theme that's irritating Charlie Munger here is the transfer of wealth from kind of beginning investors who are putting, stimulus money, unemployment money into the stock market because all they've seen over the last, 10, 11 years, except for that quick, 30% drop last March, is up and up and up. And so, I think the irritating part for Charlie is probably just the unfairness of it all. These greedy brokerage firms, greedy Wall Street, selling shit to, newbies who don't know any better. So I don't know. I'm curious if you have a take on why Charlie is irritated about kind of all of the frenzy. Another thought I had was, Charlie's seeing these investors, quote unquote, making money very quickly. My sense is that Charlie doesn't have much of an envy gene in him. But, I think part of it as well is just getting attacked in a sense. Warren Buffett, Berkshire, Charlie Munger, they always get attacked when there's one of these bubbles, right? Because Berkshire underperforms during bubbles like this because, they have a style where they're investing in predictable cash flows over the next 5-10 years, however long it is. And businesses like that don't tend to do very well in an environment like the one that we're in. So, it's possible that's part of it. But I'm quite sure that the deeper piece of it here is just that it doesn't sit well with him seeing these investment the investment banking industry just making so much money off of people who are just going to lose their shirts, right? It's inevitable. So I just wanted to share my 2 cents on those couple questions from Charlie Munger. A couple other great moments in this 2-hour talk, and if you guys haven't seen this yet, definitely watch it. It's fantastic. Charlie doesn't hold back. He tells it as he sees it. He's asked, do you think value investing is still relevant? And he says, of course. Well, that's easy. Value investing, the way I regard it, will never go out of style. Okay, all investing is value investing. All investing, done properly. If you're actually trying to value the businesses that you're buying and buying less at a price less than the value, that's value investing. This was great. He was asked, would the Daily Journal consider adding Bitcoin or other cryptocurrencies to the balance sheet like Tesla recently did? Oh, so good. I love that question was asked. And he said, no, we will not be following Tesla into Bitcoin. And he said it with a very straight face. I was impressed. We don't get too many smiles out of Charlie Munger these days, but that would have been one where I was thinking, we might get something here. How do you decide when to sell stocks that have appreciated beyond intrinsic value? Okay, that's been a hot question lately as the market keeps going up and up and up. He said, well, he was asked about BYD specifically in China. He said, we admire the company and like its position. And we would have to pay huge taxes if we sold it now because of, how much it's gone up since Charlie bought, I believe since Berkshire bought. But Charlie, I think, also owns BYD through Li Lu. So kind of multiple avenues there. It says he has a very smart friend, Charlie does, who sells half when it gets frothy. Okay, so that's one option. That way, if it keeps going up, you're happy. If it tanks, you're happy, right? You're playing either scenario if you sell half. Charlie doesn't do that, but he doesn't criticize it either. He thinks it's, a decent way to go. So his main answer was he doesn't want to pay that huge tax bill. So last couple questions. What would you recommend as course materials in teaching business? Okay. And Monish Pabrai answered this question recently. I think it was the Georgetown talk. He said Harvard Business School started out teaching the history of business. He thinks, that's the best way to do it, right? You learn kind of the history of capitalism, the history of business. And he mentions also how business success long-term is a lot like biology. And you get there the kind of interdisciplinary thinking of Charlie Munger, how all businesses die over time, and species over a long enough time also die. So, a lot from biology can be applied to business and investing. What's Charlie's method of learning, right? He's a continuous learning machine. He says, he had the right temperament. When people gave me a good idea, I quickly mastered it and started using it. Pretty simple there. What new material do you have around psychological misjudgment? Charlie has a very popular talk that he delivered at Harvard. I think it was in '95 or something, highlighting, a dozen or more human psychological misjudgments. He says psychology gets really useful when you integrate it with all other knowledge, when you synthesize it with many other fields. And he gave a little poke to psychology departments, how they're in such this bubble, just focused on psychology. And it's not so useful when it's isolated in that way. But when you apply it in an interdisciplinary approach, it gets incredibly useful. And that's, I think, one of the biggest keys to how successful Charlie Munger has been over his career. He says, when I saw that psychology was necessary and I didn't have it, I didn't just learn the little tendencies well enough to get A's in psychology, like most people did. I learned those tendencies well enough to synthesize them with the rest of knowledge, and that's the right way to do it. So, and a lot of that is kind of talked about in Poor Charlie's Almanac. So, again, check that out if you haven't yet. Anyway, guys, I just wanted to kind of share some of those takeaways from the Daily Journal annual meeting last month. Still such an incredible source of wisdom. Charlie Munger just seems to keep getting better at, I think he's like 96 years old. So I'm hoping we still have a number of years left from Charlie Munger. It sounds, when I hear him talk, he seems, sharp as ever, quite frankly. So anyway, guys, thank you for watching, and I'll see you all in the next video. Take care.